thank you, Erik, once again for being here. You've been very generous to the Smith School and our center for many, many years now, and this, for me, is the highlight of our spring calendar. So, a word in flux sounds like an understatement. When was this report prepared, and did you have a sense that it was going to be in such flux?
I don't know. I think the honest answer is we didn't know how much flux the world would be in now. But nevertheless, I think for some time now we've been able to predict that the degree of volatility on a number of levels, geopolitical, macroeconomic, broader social, would be rising. The question is it a gradual issue or is it more abrupt? And you've seen a little of both, I think.
Yeah, it reminded me of that. Hemingway has, I think, in The Sun Also Rises, how did you go bankrupt? First gradually and then precipitously. So yes, something along those lines. But I mean, it's sometimes hard to appreciate how much influx it is, because I think it's not just events happening, but one sort of wonders about the whole post-war order, right? I mean, the institutions, I think that we hear talk of the US exiting the World Bank and IMF. I mean, it's already left the WHO. WTO react as if it doesn't exist. So in some sense, these are all institutions that the US helped create, that have governed how the countries around the world have interacted with each other, and it seems as if the bottom is falling out right now. And what are your thoughts on it?
I think that's right. I think that's right. For some time, we've seen erosion of the rules-based structure that a lot of it came out of the Second World War. We saw the development of international law and organization, concepts that were memorialized, like non-acquisition of territory by violence or by warfare. We saw a number of other issues that have progressively come under assault in recent years. So even though you could argue that a lot of the current policy issues are very abrupt, as you say, Gislain, nevertheless, I think for some time there's been key evidence of erosion. World Trade Organization, WHO, we've seen World Bank and IMF kind of looking for a cause in the Bretton Woods system that came out of that. All of these issues are, I think, a reflection of a broader ennui, an alienation that's occurred not only in this country, but I'm just back from Europe, as I mentioned, and there's a lot of it there now. And on top of that, in other parts of the world, and we're seeing a significant shift, as we write in our report, from unipolar world to multipolar world.
Yeah, that's so that let's get into the report. So very often we try and frame everything in US-China kind of terms. It used to be the West and China, but now it's more US and China. And I'd love to get your thoughts on where Europe stands right now, since you're right back from there. But the first of your wildcards is this global South at the inflection point, and you talk about the middle powers. So, could you elaborate on that?
Happy to do that. Well, first of all, just by way of background, our report, as Maria mentioned, used to be on trends, but what we thought was year on year, we're seeing many of the same important trends governing how things go and how businesses are working internationally now, and what kind of issues are in the headlines. So what we thought is really, wouldn't it be more interesting if we kind of recast our approach and think about wildcards, the discontinuous scenarios rather than the continuous scenarios. So maybe it's a question of gradual versus abrupt. But nevertheless, we thought that I think the word wildcards was a better reflection of the kind of thing that we were pursuing in this report. And so as we thought about the global balance, and you're absolutely right to suggest that the Washington-Beijing axis can be an organizing structure for looking practically at everything these days: technology competition, economic competition, broader geopolitical, military. How many of you know, for example, that China's Navy is the largest in the world? Or that they conducted, glad to know.
Wow, State Department.
Ah, good. Well, then you probably also know that they conducted more nuclear tests last year than the rest of the world combined. And when you think about the military balance, not only between, not only at the conventional level, but also at the nuclear or other levels, what you see is an entirely different reality. And it's very easy to look at the world only through that lens. But from our point of view, there are a number of significant powers that have been at the middle range, that have been expressing themselves as the BRICS and then the BRICS Plus. In the end, I think that they are becoming much more significant economically and politically. And by organizing themselves in the BRICS framework, I think that they'll have a more important influence in the future.
So in terms of numbers, I think one of the things I took away from the report was that South-South trade has been increasing. So in some sense, we're using trade policy as a cudgel right now, but it's going to be less and less effective over time.
That's right. Yeah, they account for a big chunk of the world's population, the world's economy,
the world's growth rate,
the world's dynamism. Yes, and it's too easy to get distracted by kind of the headline superpower developments.
I'm interested particularly in what do you think about the continent of Africa, because I think what is happening in Africa is underappreciated, I believe, in the U.S. and perhaps not as much underappreciated in Beijing.
I agree with you. And if you look at the disparity or the asymmetry between the Belt and Road Initiative and the very significant diplomatic and economic impetus coming out of Beijing with respect not only to Africa, but also Latin America.
Yeah.
And what's being done, especially in this country, especially these days now that the efforts are underway to eliminate USAID.
Yeah. But to those who haven't read the report, can you just summarize what exactly is happening in Africa in terms of growth rates and China's presence?
We're seeing very significant growth rates across Africa right now, starting with the major populations. And why is that? The underlying demographics in Africa are conducive to that kind of growth. And if they're able to channel their growing working age population, which recently passed a very significant threshold, they have more younger people entering the workforce than much of the rest of the world. If we look at a range of demographic structures and economies, you see a significant shift.
So there's been sort of a baby boom in Africa for
Absolutely
a while.
right. And Asia. Those are the two big growth poles for the demographic growth.
And combined with that, good governance in several pockets. I mean, there are pockets of really bad governance as well, but large pockets of good governance that have made them good economies as well.
So I think you're absolutely right to suggest that there's a case for much more significant vitality, economic and broader dynamism in Africa.
And then there are precious metals as well, which might be one of the attractions.
But that's always been an issue for Africa. They've always kind of been a resource depot, even during the colonialist period. And now, of course, we're going to see across the world significant attention paid to critical minerals. And Africa certainly has a huge repository.
Yeah, and China is probably refining 90% of it right now.
That's right.
Yeah. Latin America, let's turn to what is happening in Latin America.
Oh my goodness. Well, where to begin? First of all, we're looking in a number of societies that are under significant governance stress these days, from Milei in Argentina to the decision by the Colombian president yesterday to remove, or at least to ask for the resignation of most of his cabinet, to the meltdown that we see, tragic meltdown in Venezuela. It's quite an interesting area right now, at least in terms of governance challenges. But China's been very active there. Big port facility in Peru. We're hearing about the role of a Hong Kong company and administration of Panama Canal in terms of that set of discussions right now. But generally speaking, there's a lot of kind of back and forth in Latin America right now with respect to economic forecast, among other things. Our projections, Isvaya, are for Brazil to only have a lackluster rate of economic growth, average economic growth through end of decade right now. And some of the other larger economies in the region are also, our projections are rather anemic for them. So they're going to have their hands full, a combination of static economic growth on the one hand, and then these broader governance issues on the other.
So in terms of the growth of the middle powers in the global south, what's the advice you give to the CEOs that you talk to?
Well, right now, we're telling them, first of all, that we're expecting average global growth now through the end of the decade, average annual growth of 3.2%. That ain't much to write home about. For those of you who are schooled in the figures here, that's a decline. We're seeing a trend decline in terms of growth. But those big global numbers, really, they mean everything and they mean nothing. And what we're advising our clients and colleagues now is that they need to be looking long and hard about pockets of economic growth because the disparities between high growth and low growth economies are going to be quite large. I was escorted into the room by a young colleague from Mumbai in India, and we're watching India very carefully right now. Even though the economy has been declining marginally for the last 3 cycles, nevertheless, we're anticipating about 6.5%, which is the most rapid economic growth of any large economy in the world. Really quite extraordinary. And now, when you think about it, we're looking at an India that is trying to, in effect, modernize and internationalize its economy all at the same time, while dealing with the traditional issues we were talking about on the way up, the various regions of India, from we were talking about Kerala in the south, all the way up to Punjab, with the remarkable kind of coalition politics legacy that India has. China, of course, is a remarkable case study right now as well. We're projecting average annual growth for China through end of decade at 4.2%. And for those of us who have been watching China for years and years, that's a different story from India. They're dealing with declining trend rates, and that's going to be a significant challenge for Xi Jinping in the Communist Party in China. But what we're advising our clients now, and this kind of comes back to your premise when we started, is that every major economy in the world is, for very different reasons, but nevertheless, is reached a significant inflection point. Whether it's India or China, or whether we're looking at Europe, we can come back to that if you want, or Japan, which is going through a big political and security redefinition now in its neighborhood. Or if we think, obviously, about the United States, I would argue that we have some very traumatic changes underway. Now, I'm not being partisan one way or the other, but you have to acknowledge the point that these policy positions are very different from the ones that we knew before. So I think that we stand at really a remarkable moment for a number of these reasons. And when we think about the companies that we're advising, they're throwing millions, hundreds of millions, in some cases, of dollars into investments. And can you imagine if you've got a 5-year capture or a 10-year or whatever, you've got to be concerned about this geopolitical churn going on right now.
So moving on to tariffs, and I think I should keep track of time, we'll keep moving fast. Tariffs, what's the worst case scenario you're planning for, or you can envisage?
Well, we're running a number of contingencies now and a breakdown of the trading system. I don't think that's very realistic right now. I think that cooler heads will prevail on the whole thing. We should ask our colleague from the State Department on this, but in any event, I believe that probably the outcome is bounded in this way. I've already said average 3.2% throughout a decade. There's some upside in the highly unlikely event that we were to get some kind of significant alignment between these major powers, all of which are in inflection right now. We might get above that, and that would be a happy phenomenon for all of us. The lower bounds is the one that we need to be worrying about. And I will quote the IMF. They have a remarkable chief economist, Gita Gopinath, who's, it'd be great to get her out here, by the way.
I have tried. Yeah.
That would be...
but if you happen to know her, please extend an invitation on my behalf.
She's running a number of extraordinary research programs, among other things, at the IMF. One of which is to think what would happen if we had a breakdown in trade. And last fall, they estimated at the IMF that potential collapse, trading collapse, could lead to a decline in global output of 7% or so. Now that would really be horrible for societies across the world. And I don't think we need to worry about that.
That's worse than a COVID shock.
Absolute worst scenario going forward, yeah.
I mean, well, one interesting thing I saw from your report was it's not just an American phenomenon. There's a lot of tariff tit for tat going on, quite aside from us as well.
We quote in our report a group called the Global Trade Alert, which is out of University of St. Gallen in Switzerland. And they do a lot of interesting, if you have a minute, you should look at their site. But they track what they call government interventions, including tariff, non-tariff barriers, a range of other ways. This is classic statist economic policy, infant industry protection, subsidy support, all of this. All of which, by the way, is coming back into use right now. And over the years, as you suggest, the level has been rising of these government interventions, and I think that it will probably continue rising in the future. We're investing in our think tank in Kearney, the consulting firm. We're looking now very, very carefully at industrial policy, and that is the government intervention in economic activity, and we expect to see much more intense industrial policies in the years ahead right now.
One thing that when I follow the news, I haven't seen mention of, and maybe I'm off base thinking about this, is that the president's, of course, been very worried about trade deficits. But those trade deficits make their way back into our stock markets. So if for some reason we were to even get these trade deficits down, what would the effect on U.S. equity markets be?
Well, I wonder if there aren't a few misconceptions about trade deficits and their implications now. If we look to constrain our international economic linkages because of trade deficits, oftentimes that means that if we produce things that are prohibited by tariff and non-tariff barrier by policy, that they would be much costlier for us. Years and years ago, I shared a flight with a former U.S. trade representative who has since died, a wonderful, wonderful person who I admired a great deal. And I was talking to him, obviously, at the time, about what was then NAFTA. This was prior to USMCA. And I said to him, isn't it amazing that when a company goes out of business because of foreign competition, it makes the local news, but we never see the kind of marginal gains in many of the other businesses, the other companies that keep piling up day to day that are much greater than those losses of the elimination. And he said to me, yeah, we're going in the wrong direction on this. And he said, Erik, we need to ask ourselves, do we want to become a country of pajama makers? Or should we allow other countries that are in that stage of development to make our pajamas, and we'll import them, maybe by deficit, but that's what it is. It's an extreme example, but in the end, there's this slide down to economic autarky that brings all of our prices up, right? And I think it reflects a diversion from the kind of high economic dynamism that we should all be looking to achieve in this country and others.
Yeah, and it's just pure historical accident that we don't count services as part of the trade deficit, and the U.S. Is at a stage of development where we are exporting a lot of services, financial services, and other things.
Yes.
Before we move on, one thing, because it's been in the news so much, the de minimis exception. What exactly is happening there, and what would the effects be?
Well, the straight answer to that is I don't know what's happening there. It's in abeyance right now, legal abeyance.
For a day we thought we knew it.
Yes, exactly.
So,
but
could you explain to them what the de minimis exception is and what's going on?
They're micro imports in effect. When it's below a certain threshold of value, they can get in without levies, tariffs, or other controls. And we saw the U.S. Post Office kind of shut down, especially with respect to China, because a lot of these Temu, I'm sure many of you are ordering from that now, or other kinds of packages, were getting in without being really controlled that much, and certainly that's something that is difficult for, and it's been a source of concern for especially for the new administration. So the question is, the de minimis, what is the lowest threshold by which items should come in the U.S. and be counted? And we're not at the end of this journey yet. We've got a lot more to go.
So yeah, indeed, we saw the Mexico and the Canada tariffs be at least delayed for a little while. So we'll see what happens there. And are you hopeful that in the end we might reach something short of an all-out trade war?
I'm always hopeful. But both Canada and Mexico are affected very significantly by these aluminum and steel tariffs that are apparently coming into effect tomorrow or the next day.
Mm-hmm.
So if they thought that they were off the hook, they're on the hook again. And this administration seems to be looking at tariffs at three levels. The first is a kind of a straight punitive tariff. So, for example, when Colombia, the country, didn't want to take back undocumented or illegal migrants to the U.S. In the flights, the administration chose to impose tariffs on them for a weekend. They worked it out, fortunately, but because it would have had a devastating effect on the Colombian economy. But that is a good example of a punitive tariff. Then there are kind of broader targeted tariffs, like the 25% Canada and Mexico on fentanyl and border security issues. And then on top of that, there are the kind of uniform tariffs now on like aluminum and steel that would apply across the board to countries. So we have significant and different layers of tariffs that are coming into place right now.
So moving on to corruption, I think from kickbacks to deep fakes. I don't know if you got today's news that the president has declared that the laws that would prosecute US companies from bribery and other things, that's been frozen or put on hold. I don't know what the exact word would be. So I was telling them before you arrived just how several of the things in this report were in fact in today's news. So I think the broader point you make there, which this confirms, is that not only has there been little progress recently on fighting corruption, but it appears that we are sliding back, and this is at the global scale. And could you comment on that?
It really is. And my view is that it's hand in glove with loss of democracy too. We're seeing a parallel erosion of democratic systems and institutions now. And in effect, we're seeing more by way of corruption, significant and institutionalized corruption across systems across the world.
And perhaps also there's a role of technology in this, and could you elaborate on that?
Yes. How many of you own cryptocurrency right now? You do? Well, I hope you hang in there, I guess, in terms of returns. I don't know how long they'll last. I'll say a prayer for you tonight. But bottom line is that technology enables us now to kind of shift economic priorities and values in a way that can create some significant challenges, shall we say, and hopefully for you benefits. But I worry about this kind of thing in the future. And as we look at kind of broader corruption issues, the curve is increasing, unfortunately.
Now, of course, technology hurts in many ways. There was the Italian case yesterday of AI being used to impersonate the defense minister and get some of the tycoons of Italy to part with significant sums of money. So technology, in some sense, makes all of this possible. But are there ways in which technology can help us fight corruption?
Yes, there are. Yes, there are. Yeah, we have to. So everything is a changing or a moving target right now. But technology, its current, and we need to qualify that current state of technology, because we're moving into vast improvements in computational speeds as we're going to quantum right now. We're moving into other kind of encryption territory and a range of other issues where technology will do more things, both good and bad. It will always be a double-edged sword, I think. But it can be helpful. It can be extremely helpful in addressing this.
I don't want to deprive the audience of an opportunity to ask questions. So there are a couple of other, really interesting discussions on electricity and then the new age of super-empowered individuals. Mr. Musk, I just made an offer for OpenAI for leading a group with $92 billion. So, so those are other things you can find, but really, I think I'll pause here and make sure you have an opportunity to ask questions. Erik knows a lot about everything, so whether it's the report or anything, just feel free to ask about anything, and I'm sure he's been put in that same spot by CEOs and others to opine on lots of the world's challenges. So let me open it up and give you the opportunity to ask.
Which office in the State Department are you working in?
Bureau of Legislative Affairs.
And are you a student here as well? Or?
Yes.
Great. Congratulations.
Thanks for your question. My name is Heather, and I'm a grad student studying machine learning. I had a question. We see like AI is getting super advanced, and do you see any real, meaning, practical way disruption in other industries? If you do you see around the world how the global economy will look like if any disruption happens? And also I have another question. China is kind of expanding their dominancy through business techniques and some sort of like business adventures around the world. And there's de-dollarization is also taking place. I don't know if it's just a technique for other countries to pivot and negotiate with America, or if it's a real, if in real meaning it's happening. If it's happening, then what the US is doing, I was just like using our tariff and embargo techniques to like do negotiation. Economy is getting like pretty weird shapes. I don't know what's going to happen. It's just.
Okay, I heard two questions there. First one on AI, and second de-dollarization or reserve currency issues,
Yeah.
while we go. All right, let me first and then second. On the whole question of AI, just following up on the point that we just made here, is that AI is likely to be both positive and negative in the future. There's a big shift. In fact, the Europeans are having a meeting in 2 days with Mr. Modi on the one hand and a couple other kind of
And I think the Vice President is there as well.
I was just, you preempted me.
Oh, sorry.
They're going to be informed in their deliberations by J.D. Vance. Yeah, he's going there on his first mission. And they're thinking about how AI can be innovative in the future, and I think it can. The whole idea, though, is how countries will try to find a pathway to regulate AI or find ways to create guardrails in the future. And I'm not sure they can. I'm really not sure they can.
Especially with the DeepSeek. If U.S. put guardrail on our companies and our AI makers, the other countries certainly will not do it. Which you can see, DeepSeek got the tremendous performance in really short time compared to like our companies, which were taking like a lot of money and resources.
Yeah.
So in the defense of our companies, the first time is always more expensive, right? I mean, so to copy a technology, it means you can avoid lots of dead ends, and so. But I think yes, that's what made all the stock market move that day. Just not the fact that DeepSeek was genuine competition, but it changed assumptions about the economics of training large language models.
Right. And now we're not sure that the concerns that created that market dislocation really applied that much, that DeepSeek may have established its position in ways that might not necessarily threaten our thinking about the underlying economics.
OpenAI claims that they distilled information from OpenAI.
I think it's not right, because OpenAI itself like took a lot of data from the internet, first of all. In terms of AI, they probably took themselves like models from other searches,
Not that part. Well, I think they used human beings to refine the models, which is a really costly part of the process. So if you can distill the model, you can save some of that cost. But sorry, we can have a conversation afterwards on the technical aspects.
De-dollarization or reserve currency. We're not seeing a lot of shift in terms of alternative currencies or stores of value right now. Ultimately, our crypto contingent here may see at least more digital currencies come up. But there are a few national cases of this now, but not very many. And for the time being, the dollar is still a significant international store of value. Any of you hold gold? Yeah. Okay. Well, that'll offset your crypto then in the future. Gold went over $2,900 an ounce today. So I remember back when I was your age, it was $35. So it's been quite a journey. Yeah, it's been quite a journey.
Any questions?
Hi, Mr. Peterson. Thank you so much for coming. My name is Paul. I'm a junior studying finance and real estate. My question to you is, throughout your conversations with CEOs and business leaders across the country, what are some of the most common pieces of advice you found yourself giving since the change in government this past January?
Well, the kinds of questions change from region to region. Here in the U.S., everybody has already kind of put together a war room on the new administration. If they're a big international company, and most of the ones I talk to are, they already really understand what their position should be if tariffs are imposed or whatever. But they're looking beyond the issue of short-term tariff repercussions or whatever. So they're asking, what's next? What is my board worried about, and what should I be worried about next? So in the case of the U.S., a number of people are asking, what about debt overhang right now? Yeah, and some of the people on Capitol Hill, including some new advocates on this from the Republican side now, even though both parties have contributed to our conundrum, our debt conundrum right now. But the operative question is, how are we going to pay for, to service a debt which is steadily increasing? And that's the thing that most people aren't worried about right now, or don't see the fire through the smoke. There are a couple significant bets going on right now by this administration. The first is that it can cut down expenditures on the federal workforce and look in other areas through tariff and non-tariff benefits, selling off of government assets, a range of other issues, to offset plans that they have to reduce taxation and deregulation. That's a big bet going on right now. And you need to dissect that bet for how it might manifest itself in the short term and then in the longer range. The other thing is, and all the big economies are doing this now, they're betting on sectors. This is the industrial policy that I was talking about. And so, in Beijing, they're talking about new productive forces. By that, they're talking quant and AI and some of the other issues, the ones you would expect. And so are we. Same here. Same here. So the question is, we saw the president try to mobilize some investors in key technology recently, and we saw that Mr. Musk didn't believe that they had the capacity to do much in support of that. Yeah, there'll be a good discussion here. But bottom line is that we're going to see national resources that are allocated to significant big bet areas, including technology. And so that's right over the horizon. Now, I mentioned that I was just back from Europe, and I did a 3-country tour in the last 11 days. And they're just trying to figure out this Trump administration. They're saying, please, who do you know is a Trump whisperer who we can get to know to try to figure things out? They're still waiting for the shoe to drop on the European sanctions that Trump has mentioned. We'll see how that plays out, but my guess is that they will escape tariffs any more than our friends and neighbors in Canada and Mexico. So it's a different set of discussions each way. Now, again, this is big picture, but U.S.-Europe now, we're seeing a divergence. We're seeing a divergence from the financial sector in terms of ECB and Christine Lagarde against Powell and the Fed. We're likely to see very significant and maybe even widening differences between interest rates, inflation that they're taking on, that kind of thing. And then on top of that, U.S., we're projecting here 2.6, 2.7 growth for the next couple of years. And Europe is way down in the 1.1 to 1.5 range. So they're gasping, trying to find ways to make their economy more competitive. And they're also dealing with all of these disparate elements. So there are different conversations occurring across regions right now.
Do we have any?
Let me thank you all again for waiting. It's so frustrating. I wish that I had I was thinking that if I was looking at the miles in my car during it,
I'm trying to.
and I was thinking that, well, if I could run a 4-minute mile. No luck. No luck on that.
Good evening, sir. Thank you so much. My name is Connor Clark. I'm a student in public policy. And I guess you had mentioned when discussing China's projected 4.2% growth rate versus India's 6.5%. that
Yes.
China was a case study. What exactly are they a case study in? Like what trend or theory or
Well, what I
process?
meant, I don't remember exactly what I said about a case study, but probably what I meant was that way back when I was working with Henry Kissinger, we were looking at then the opening of the China economy to the rest of the world. And that opened up a period during which they had remarkable rates of growth. 7%, one year I remember it was double digit, it was over 10%. Now, the truth is that, especially during that period, you never knew how accurate those figures were. But what we did see was probably one of the most significant economic transformations that we will ever witness over the course of our lifetimes in terms of the modernization of the China economy. So they've come a long way very quickly, to be sure. So they were a case study in terms of high growth. Now that growth rate is declining, and there are a couple structural breaks on that, one of which is their demography. They put together a one-child policy way back when, and now that policy has come to haunt them a little bit, I think, because they've got very few young people, and yet what was a demographic pyramid is now more or less a demographic rectangle. And as much as you young people hate to admit it, you have to find ways to deal with us in our old age, and we all become very expensive when we get older for health and other reasons. And that's really the case in China right now. On top of that, when you have a large population which reaches a significant level or a higher threshold of economic development, then your growth rates naturally begin to decline anyway, so you need to factor that in. But nevertheless, 4.2% is going to be awfully difficult for this government to deal with for a number of reasons. They want to invest in the economy, They've created a big export capacity, but they can't drive up domestic demand in a way to make it meaningful. So they have their own set of big bets.
Would you add the housing bubble to that, I think, is another...
You're wise to remind, yes, exactly, no, of course, the housing bubble is a big issue right now. And then debt in state banks too, in local state banks, yeah.
Thank you so much.
You bet, thank you.
I think...
Final question?
Any final question?
I think it's a question, but I literally, like, a couple weeks ago, I just said to myself, is the World Bank and the IMF next? Like, what, I just kind of wonder what would happen to the US if we did exit from the IMF and World Bank? I mean, I feel like it's a little bit more of a significance than the WTO or not WTO.
It is. First of all, we've had a very significant influence in both the World Bank group, so that's World Bank plus MEGA and all the other PS, the other groups that are part of that, and then the IMF as well. And we'd be taking ourselves out of their decision-making process. So we won't make them defunct by leaving. We will limit their capabilities if we were to decouple. But that would give, for those who are concerned about rising China influence, for example, it would give China a remarkable opportunity for them to increase their leverage in international multilateral affairs. And to me, that seems short-sighted with respect to U.S. geopolitical interests. And then it's not only IMF and World Bank group, it's also regional development banks. So the Inter-American Development Bank, the European, all of them. We'll see where it goes because we have an uneven level of influence on those smaller regional development banks, but on the IDB, for example, it's very significant. If we were to decouple from that group, it would be, I think, a self-inflicted blow. That's a personal opinion, folks, but I don't understand the logic. I think it's a relatively small investment in terms of the periodic recapitalizations of those groups, and I just don't understand the logic very much. Maybe there is, I just don't know.